What are you guys just like high level thoughts with everything going on right now? What's the sentiment that you're seeing?
We were talking about this a couple days ago with our other business partner, Zach Wilms. And, he's got a famous line right now, which is basically everybody's looking for a reason not to do a deal. And that resonated really well with me because there are opportunistic buyers. There's people in the market looking.
I'm chatting with some other realtors and some investors, and the sentiment that I got there is like the people that have a portfolio are still buying. Like it's the same sentiment of when stocks are down, is you're just dollar cost averaging. So it's like I'm just able to buy something less than what I was able to before, and that just makes my whole portfolio better. So it's the people that have capital, they're still making moves. They're just being, they're being more selective.
Welcome back to REI Hot Seat. Andrew Hines here for another Florida edition. But I'm here virtually with Jacob Campanaro and Brad McRae, and we're talking about a Hamilton Sixplex. Is it purpose-built, guys?
Purpose-built.
Yes, it is.
All right, cool. Well, we're just going to dive right into it. Thanks, guys, for being here. Who wants to run with this and just tell us what we're talking about here?
Yeah, Brad, take it away.
Yeah, so this the property here in Hamilton, it is a purpose-built sixplex with 3 of the units already renovated, ready to be rented out with the new owner or whatever tenants that they want in there, as well as 3, let's call them legacy tenants that have been there for a little bit longer with definite room between current and market rents. And then there's the ability to add 2 units in the basement. There was units that were done in the basement a long time ago that the city shut down, so the new owner can come in, make them legal, and get them rented out.
Nice. And you said this is a purpose-built Sixplex?
That is correct.
Okay.
It is. I can even share my screen with some photos if you guys want.
Yeah, please do.
Yeah, and we can dive into a little bit more. Just to add on to what Brad was saying, so a couple reasons why I really like this building. The renovated units all have new windows. The plumbing was upgraded in the building recently. Electrical was upgraded to the units that were renovated. So it's quite a pretty little building. And I'm just bringing it up here right now.
Sure. And Brad, just while Jacob's doing that, I always like to ask that question, why should we care? What grabs you about it? I mean, Jake gave his sort of highlights, what he likes. What in your mind makes this a good deal for an investor to look at?
Yeah, this is a great deal for, I would say, more of a not like brand new investor, but it could be like a newer investor that's looking to get into something that's a project that you can start with immediately because of the units that are in the basement. Like they're not tenanted, they're non-existent essentially.
Right.
So you come in, you add those 2 units, you renovate them however you want, you get the other 3 units rented and refinance to CMHC. This is a quick turnaround, like 6 to 9 months, depending on building permits, of course. And you can get out, if I remember correctly, looking at these numbers, all of your money or pretty close to it.
So we're talking a perfect BRRRR. Yeah, I was going to ask. There's got to be some pretty big lift, and then with the CMHC terms on their extended amortization and lower rates, there's a way to cash flow here too.
Yeah.
Yeah, exactly.
And Brad was mentioning the existing tenants, like their rent's like $950 a month, like $975 a month. So we have 3 very, very, very under market rents. 3 units that are ready to go. And Brad, I guess it happened last night or a couple nights ago. We have one of the renovated units is leased now, and they were able to achieve the market rent that we're advertising, which I think was $1,900. So
how many bedrooms was that unit?
That was a 2-bed.
2-bed unit.
Yeah.
Okay.
So 3 2-beds and then 3 1-beds. And I'll just give you, if you can see my screen here, I'll give you a little bit of a Google Street View tour.
Yeah, we've been staring at it. Yeah, it looks good.
Yeah, perfect. So nice little brick concrete building. You'll see that obviously the renoed units have these new windows, right? So we have 1, 2, 3 renovated units, and then 1, 2, 3 existing, long-term tenants. They also went ahead and did the common area windows, so they upgraded all of those. This building doesn't have parking, which is one slight against it. But it does have quite a bit of land, which is interesting. There's this little area here, which is actually owned by the property.
So maybe there's a minor variance potential there to make that parking, do you think?
So minor variance, I was thinking potentially laneway suite, secondary unit, something like that. I don't know. We haven't looked into it, but got to make some income off of this. There's got to be something there. And then if we just drive down the street this way, again, a little bit of land right here. Is there more parking there?
Interesting.
There's lots of potential. So fire escape off the back. You'll see here, there's a bit of a garbage area, a nice storage area. So this building's been managed quite well. Location wise, which is one of the reasons why I love this building. So it's concession. Anybody who's not familiar with this pocket of Hamilton, this is kind of like, I call it the downtown of Hamilton Mountain. So you're up on the escarpment, but this is kind of the main drag. This is where all the shops and restaurants and stuff are. If you do live on the mountain, it's a nice little clean area up here. Lots of cool little cafes and restaurants. And then a big draw for this building here is if we drive down the other way, we have Juravinski Hospital, 1 block over. So 1 block from this building, you got Juravinski Hospital, which is a well-known hospital in Hamilton. You pretty much have Juravinski and McMaster. Those are the 2 big ones, and then there's a few smaller ones around town. So something that I'd love to explore on this building, and Brad, you're probably the
midterm rentals
to talk about it, but it's midterm furnished rentals. I don't know
nursing staff and stuff. I'm sure that you're okay with. I mean, I'm guessing, but I'm sure you're probably okay with those 30 days plus.
Yeah. It's only when you're less than 28 you need the license.
Yeah. What, Brad? Have you ever looked at midterm rental on this one?
Not on this particular one. No, I literally, as you were going through Street View, I was thinking about it right before you said it. I'm like, this is a great spot for that, or even to get the license to allow the shorter 2 to 4 week stays, because that's kind of a sweet spot for some of these, is they're coming in for their shift work rotations.
Yeah, and I only mention that because dealing with the leasing agent. Who's doing the leasing on the building, she has mentioned to me several times, there's a lot of nurses and doctors that come in and say, hey, I need something for 6 months, 3 months, right? I'm in and out kind of thing. So there's definitely potential there for this. Then we don't really have to worry about parking. And stuff like that. But yeah, all in all, a very tidy building. As Brad mentioned, the numbers are pretty solid on it. We're looking at 3 units at 1,900. We're looking at 3 units around 950, 975 that we could eventually increase. And then there's the 2 basement units, which are ability to get those and actually make, I would say bachelors, right, Brad? Looking at those units there, they're probably more of a bachelor unit than a 1-bed or a 2-bed.
Yeah, yeah, it's been a while since I looked at them, but it's small, junior 1-bed or bachelor. Yeah.
One thing that I would just question on that is, has that been approved or even discussed with the city? Are they the zoning works? Is there any requirement for parking for new units? Because obviously wouldn't conform there. Is there a minimum lot size? Are there a couple of minor variances that would need to be gotten in order to do that?
Yeah, it's a great question. Based on my research, Andrew, the short answer is no. Zoning does allow, I believe it's up to 11 or 10 units here. So we would be good on zoning. In terms of parking ratios, I'd have to do a bit of a deeper dive into that. However, I know this area, this whole strip basically has no parking.
Yeah, I know that there's some areas of Hamilton that they've just waived the parking requirement, and there's also several zonings that there's no parking requirement. So it wouldn't surprise me that there wouldn't be one.
Yeah, and this is I think this zoning, again, I haven't looked at, I don't have it in front of me, but I think it was a downtown corridor zoning.
Yeah, so it probably isn't an issue, but that is something to as part of the due diligence to do. Just confirm that conversations with the city.
Of course.
Do you guys have any numbers on this, spreadsheet wise, that's prepared to show?
Brad?
Yeah, I'm just.
Brad's working with a potential buyer on it, so he's gone pretty deep into the numbers.
Yeah, so we have all of the numbers here. So as we saw, the 3 of them, Do you know which one has been recently rented? So since I did these numbers, one of them has been rented, which we talked about, but we'll just assume it was at here. And then we have 3 additional ones that, as you see, like they're significantly below market rent. Like those are quite a bit less with
So
some
market
room.
rent for
And then
those would be what, like 1,600 or something for one bed?
yeah, 16 for one bed is what I have there.
Okay.
Yeah. Yeah, I'd say 1650, 16 is very realistic. 1850 for the 2s. And then we got 15 for the bachelors in the basement or the junior ones. Yeah.
Yeah.
That's pretty spot on.
And a little bit of money for laundry.
Perfect. Yeah. And you got the expense figures there as well. Perfect.
Yeah, so going through here, like, you know, we use our standard CMHC underwriting practices for all of our stuff, as well as actual numbers that we have for here. And what this would look like is you're coming in of some sort of bridge commercial financing. It's probably much easier than trying to do some type of CMHC top up for this size of project. I don't really think that that's worth it for something of this size. You're coming in, you're either bringing the capital yourself for the small construction of those 2 units, the permits, et cetera, or you're getting a small construction loan of some sort.
Yeah. Yeah. And then something to mention, like if you were to, and again, I'm not saying this is the best strategy to go forwards, but something that, you know, is not well known and I've actually used it several times now is on 6 unit or 5 or 6 unit buildings. CMHC will let you debt service at a 1.1 ratio. So Brad's numbers here is he's showing it as a refi once you have 8 units, but you know, just again, something we can look at or something to keep in mind is 6 unit buildings could be done at a 1.1 debt service. And that's whether that's this building or any other 6 unit building. Now, CMHC changes the rules so often, who knows how long that will stick around, but that is the case. And we're using it on another property I have that is a 6 unit as well.
Yeah. So those who are following on the screen right now can see Brad noodling with the numbers, trying to make it work, figuring out where it debt services, right? Getting to that. You're trying to get to that 1.1, right?
Exactly. Yeah. So on acquisition, assuming you get market rents for the 3 that are, or two additional ones that are vacant, you're looking at a roughly 70% loan to value with a 1.1 debt cover, assuming your interest rate's 4.1, which I think is where it is right now. It's been a couple of days since I looked at it for a property this size.
And then the strategy after that, after you're done your run, is go back and try and get what loan to value with MLI Select or just with regular CMHC insured.
Yeah, so it would be a regular CMHC insured. You'd be able to, again, just noodling with the numbers here. You're probably looking at your 85 or close to 83.
Yeah,
83% loan to value.
Okay.
Yeah. And guys, and just to throw this out there as a caveat, like this, we're running this at the full asking price. You know, there's no guarantee that there's tons of flexibility here. I don't know, but you know, these numbers can be adjusted, right? And that's something to look at. Because I know I'm looking at some stuff in here going, yeah, you know, a little bit off that purchase price, and this is going to look a heck of a lot better. But we want to show things at the asking price, have the conversation with the clients. Everybody's strategy is completely different. So, you know, what I would recommend on this building is if there's interest in this type of, you know, little project BRRRR thing with a building that's going to be nice and stabilized in a good area, reach out, right? Give me a call. We'll send you the numbers. We can have more of an in-depth conversation and a conversation tailored to, you know, who the buyer is.
Yeah. Yeah, that's a good segue just to join the insiders list through the link. If you're on the podcast platforms, it's in the show notes. And if you are on YouTube, then it will be below the video. Join the insiders list, and then that gives you an opportunity to speak with Jake or a member of the team and ask those questions that you have.
Exactly. And find some more amazing deals like this before it even hits the market.
Exactly. Yeah. Well, they get what? You're still 80% of your deals are off market. They're kind of pocket listings that you guys have in your network and internally in your team.
Well, pocket listings and off market listings are different, Andrew. So
okay, so not a pocket listing, but an off market listing. You know, somebody in your network or something within your team.
Correct.
Exactly.
Correct. Yeah. So then, for example, this building is off market. This is not on MLS. It more than likely won't go to MLS. We have quite a bit of interest in it. And we're, expecting see some offers next week, hopefully. But again, anybody that's watching this in real time, let's give us a call. Let's see what we can do.
And my bank of episodes isn't huge, so this is pretty fresh. So this is pretty current. Maybe by the time this posts, this building's still available. It doesn't hurt. Doesn't hurt to put in an inquiry. Exactly. And one thing I wanted to ask just about the numbers here is what are you budgeting to complete those 2 units?
So I have in with the, it says contingency. I just realized that instead of actually construction, but 150 for the 2 of them.
Gotcha. Okay.
And that comes in with the permits, but also taking into consideration some grants. I believe last time I looked, there was some potential grants for adding additional units in this area.
Yeah.
Okay, nice. Yeah, 150 is obviously light, but there are also small units, like they're just flat batch.
Yeah, and something to mention, because I was looking at that going, 150 is a tad light. However, these were already units. So there's electrical to these, there's plumbing to these, there's a bathroom already built out in these. Mm-hmm. So can you reuse any of it, some of it, a little bit of it? We'd have to explore that. But at least the rough-ins are done. Like, that's the way I was kind of looking at it. Is like, okay, you're saving your breaking up the floor and running new plumbing because there's bathrooms in both units. Your electrical's already run for the kitchen if you want it. Right, all of that stuff is there. So that's something to keep in mind. You are having some cost savings because that work has been done. Most of the drywall, if not all the drywall, is probably going to have to be ripped out to do fire rated drywall, soundproofing. Things like that. And then obviously we got to look into the ESA permit, is the electrical that is down there and did they do an ESA? Mm-hmm. Let's explore that. If not, that's a smaller permit to pull. But I definitely do think there is cost savings because the units were built out at one point already.
Yeah, I might not have said that. Like when I said there's units to be built, they're halfway there or a quarter of the way there, maybe. Yeah. I don't know. Somewhere in that range, 25 to 50%.
Yeah.
Right.
Yeah.
Well,
they were built, and then I think the city came and shut it down many, many years ago. Like since I've known this building, probably 5-6 years, those have been like that. So this must have been shut down a long time ago. And do they make you rip the kitchen out when you shut a unit down? Like, what's the guidelines to? Yeah, we've shut the unit down.
That's a good question.
I've never been on that end of it.
Because these have bathrooms and they have all the wiring and everything, but they don't have kitchens. So I'm kind of thinking they had to rip the kitchens out or something of that nature.
That's a great question. I couldn't answer it.
That would make sense.
Yeah.
They make you do something to decommission it, but it might just be something like remove the connections, disconnect the plumbing or something like that. Like you can have cabinets that aren't a kitchen, right?
Yeah.
I think your stove is one thing that kind of proves it's a kitchen. So that's probably one of the things that's got to go. But yeah, we're speculating. Just at a high level here, if just back of the envelope numbers, what would a buyer of this building need to budget if they were doing this project? Like what's their total cash they need to have available? Not that they're leaving in, but just to complete the project.
Yeah. So, I mean, of course, depending on what the actual construction budget and timeline is on that one, like we're looking at a total of 700,000 or just shy of 700,000 when you're talking
for down payment plus renovations,
down payment, renovations, closing costs the first time, all of the stuff through. Yeah. So I would say between 700 and 800 is probably a good number depending on the budget.
And then you go back and try and get as much out as you can. Looks like the way it's written right now, you're probably even a few $100,000 in.
Yep.
And to the note like made earlier, Brad had said, there's potential to do this different ways. The big thing, and obviously, Jake pointed it out, like this is a client of theirs. Like they're going to show it at asking price because they feel like they priced it in a territory that makes sense. With that said, I'm the outsider who's not on the inside with this. I'm just going to say, obviously, everything's a negotiation. Everything's a discussion. It may be hey, we're firm at this price, and that's just what it is if it is, but it may not be either.
No, that's a good comment, Andrew. Like anybody that knows me, like if you call me and say, hey, is this negotiable? My answer is always going to be depends on the offer structure, right? It's very rare we come across a seller that if you said, here's a firm offer closing in 3 weeks, 2 weeks, but I want something off the purchase price, that seller is going to say no, especially in this environment, right? So it's a balancing act, right? Is what are the terms of the offer? What does that purchase price look like? and let's find somewhere in the middle where both of those meet that is acceptable. And that's what we try to do here.
Makes sense.
Yeah.
All right. I would say in general, like if you are ever speaking to someone and you ask if it's negotiable and they say no, it's not even worth it. Like whether it is or not, like you shouldn't say no. That's just like, that's a stopping point because that's a question that should always be asked. There's always something negotiable.
Yeah, because it's not just price. Price is not the only thing you negotiate on. There's so many items that are critical or important to a seller. Price is obviously one of them. But
I'm not saying you do that, Jake. I just mean I've heard that from people. I've heard no, it's not negotiable. It's like
they're negotiable. They're just firm on the price.
What do you mean?
Yeah, there's obviously lots of ways we could go from there, but I think this is a nice tidy episode. We talked about a pretty cool little building in a location that is obviously desirable in Hamilton. What do you guys just like high level thoughts with everything going on right now? What's the sentiment that you're seeing just to kind of wrap this one up? Because there's just so much going on in the news. Obviously, the new reciprocal tariffs in the U.S. have come into place, although tariffs for Canada, anything under the USMCA is still not being tariffed. But I don't know. A lot of people are obviously concerned with the uncertainty. So what are you guys seeing? Are you seeing people being more opportunistic in this environment or just a mixed bag?
Jacob, you can start.
I can take that to start. It's interesting. Like we were talking about this a couple days ago with our other business partner, Zach Wilms. And, he's got a famous line right now, which is basically everybody's looking for a reason not to do a deal. And that resonated really well with me because there are opportunistic buyers. There's people in the market looking, right? We're not slow. And that's for sure, right? Like it's not a slow market. There's a lot of people calling. There's a lot of interest in these projects. It's just everybody's hesitant on how good of a deal can I get? Right? Why shouldn't I buy these buildings? And they really poke and pull at the threads. And so everything we're doing has to be bulletproof, has to be 110%. We're working with a bunch of sellers, a bunch of buyers. And it's all about packaging and presenting the deal in a box is what we call it, deal in a box, essentially. It's having everything taken care of already. Right? Oh, well, financing's not going to work. Well, guess what? It will work because I agree. You already have the documents, and zoning doesn't work. Well, here's the verification certificate, and so it's just about handling those objections because there's a lot of objections. That's what we're seeing on the deal making side of things. In terms of the market, obviously, I think the biggest concern right now is the instability of what's actually happening. That's the market killer. Yes, the tariffs are affecting the economy. There's auto plants that are now on pause. I was just watching an article or just listening to a news article before we jumped on, right? Like Windsor is now supposedly putting a pause on manufacturing.
That won't last though. If that's a fact, it won't last.
It's not permanent. They were just saying for 2 weeks, they got to put a pause.
Right. Yeah. Because from what I've heard is that anything in the USMCA is going to be respected, which I believe auto manufacturing is fully outlined within the USMCA. And then anything, so with the whole not built in America, if they can prove that the parts were built in America, those parts are exempted. So then it'd just be the assembly that would be potentially charged. So it's not nearly as bad as it sounds. And, I thought about this from the very beginning. Like you have these auto manufacturers who have invested trillions, not billions, trillions in Canada in facilities. You're not just going to on a whim say, oh, by the way, 25% tariff and not have an exemption in there for them. Like I just never believed that. It just never made sense. And to this date, it's still not happened. Like they made decisions 20 years ago that put them where they are now. And some made decisions based on what happened in 2020. So obviously the ship is steering and obviously the writing's on the wall. Plants are going to go back to the States, but for the infrastructure that's there, they're going to get a useful life out of it still. That's my opinion. That's what I believe.
Yeah. And we'll see, right? Like, and that's just, again, it comes back to that uncertainty of what's happening is really what the killer is. Like the tariffs, I think we're going to work through things here. Again, I'm an optimist. I've always been an optimist. And man, last 3-4 years, there's been some stuff that I, shocked me that it came along and it happened. But again, we look at 12 to 18 to 24 months from now. I do think we're going to be in a better position. And I think we'll be will be stronger for it.
Yeah. I mean, you look at the long-term trajectory of real estate, it isn't down. No matter recession, good times, bad times, you know, and as being a hard asset, it doesn't mean it's not volatile. It sure can be, but you know, in 20 years, is it not going to be much higher than it is now? Really hard to answer that with anything other than yes.
Well, I'll tell you this: my real estate's doing better than my stock portfolio. So,
yeah, I was at a small event earlier this week, chatting with some other realtors and some investors, and the sentiment that I got there is like the people that have a portfolio are still buying. Like it's the same sentiment of when stocks are down, is you're just dollar cost averaging. So it's like I'm just able to buy something less than what I was able to before, and that just makes my whole portfolio better. So it's the people that have capital, they're still making moves. They're just being, you know, they're being more selective, because just because you're selling right now doesn't mean you're in trouble, but they're looking for the ones in trouble, because there are still people that need to get out of stuff.
Yeah. Good point.
That's really well put. Yeah.
All right. So, I mean, I think it's what it always is. Warren Buffett's saying, right? Be fearful when others are greedy, and greedy when others are fearful. Anyways, not advice. We're just some observations from three guys talking on a podcast. So, guys, thank you a lot for doing this. Another virtual session. I think we're going to have another one next week. And reminder, everybody, get on that insiders list if you want to have access to great deals and great people, and get your questions answered. And if you've made it this far, show the channel some love. Share the video with somebody you think it could help. And we'll leave it at that. Thanks, and we'll see you next week.
Have a great one.